Good evening, this is Nick Inman from VolumeProfileTrader.com on Friday, November 25th. And before we get into the weekend update, I want to talk about an opportunity that I'm giving everyone, all my viewers who are interested, and that is I'm going to be opening up a live trading room for next week, Monday through Thursday, and it's going to be free for anyone who registers, and the link will be at the bottom of the description tag on the on this YouTube page. And for registered users already signed up on VolumeProfileTrader.com, you'll get an email after this video, so not even a problem there. So let's talk about what the trading room's going to be about. And first things first, we're going to be watching the market throughout the day and looking for trading opportunities, discussing. Feel free to ask any questions you have. Any names that you want to talk about, we can. We'll go through the analysis that I go through technically, on any name that you want to discuss. And it will give you an opportunity to learn more about what the volume profile, basically what the website is about and what it's going to be offering, and to ultimately see if this is the right product for you. And my hopes are that it is. I know that after learning volume profile and how to trade it, it's changed my trading for the last 4 or 5 years, and I wouldn't honestly I would not trade without it, because I wouldn't know what's going on within the market, within the price action, and that's what's most important to me, to give me an idea of how to trade this. So I hope you sign up. There are limited seats, so you have to sign up quick before they're all gone, but it will be open to the public Monday through Thursday of next week, and then at the end there will be a nice offer of the membership that's priced at $150. We're going to give a nice discount for those who are willing to sign up, and you'll definitely reap the benefits of signing up with at the end of this trial period. So, but all right. Anyways, now back to business. Let's jump into the S&P. And today was a short day. Market closed at 1 p.m. Eastern Time, and nothing really new has changed, since Wednesday. Yesterday we had a nice day off. I hope everyone's Thanksgiving was great, by the way. And basically today we closed near the lows of the day, around 1150, and this market just keeps grinding down on low volume, and it's going to be interesting to see what happens over the weekend, and moreover next week when volume starts. It should pick up relative to this week, but given that we are towards the end of the year, volume is rather light, and it's something to be aware of. But that doesn't mean there won't be trading opportunities, because there still will be, and our job is to trade either way of either direction of the market. So as I have basically a 1 month chart here of the S&P, we see this volume profile over here. This is 1 month. This is the November profile, and this is the 1 week. This was last week. This is this week. So this week you can see we're basically in a continuation trend from the breakdown of the high volume area, the point of control from November. You can see we basically had our breakdown, and this doesn't show everything, but hey, now it does. And you can see the breakdown that we've had right at the point of control. It broke. You can see the whole moving averages are pointing down, and it's been a good trade. I got off of it a little too early, and so now I'm waiting for an opportunity. Rather for more selling, I'm waiting to see. Now we're at an opportunity where there should be more buyers in the market, but we're yet to see that. And you can see by this week, we had our point of control finish at the top of the range, and that was probably due to just the fact that how the week finished. We had 2 days, 1/2 day with light volume, so there wasn't really much, but nevertheless you can see we have a high volume patch, which was a nice trade for a day trade. We had a nice trade off the bottom, and then a trade up to basically that high volume area high, and then a rejection, and then back to new lows. So for right now, the trend remains lower, but given that it's the weekend, we just have to see how this plays out. So let's zoom out a little and see what's going on. Okay, as I zoom out on the S&P 500, this is the futures contract, remember. We closed that gap back in October, early to mid-October, and we closed that gap, so that's out of the way, and now we are close to the point of control back in August, and it was also a high volume area in September. So we're looking at what should be support, and we're just going to have to wait and see until next week. But one thing that's positive in terms of a slowdown to the downtrend, not that this is, I mean, let's face it, we made new lows relative to this recent downtrend, and it's important to realize, that lower lows and lower highs, regardless of what time frame, you need to be aware of it, especially if it's the time frame you trade. So one thing that's positive is as the market goes lower, unless if this market really falls out of bed, it's going to eventually come to an area of balance where you'll have an opportunity to, if you're short, to basically get out before the market has a nice, bounce back, or to get long and have a nice, snapback rally. So we are at levels where we should be getting that, and I would consider today's lows as potential support, and also the 1142 level. So really, let's call it the next 15 points of downside, potential support for the market, and if we hold those levels, it will be positive in the way that we are probably range bound from the lows, let's call it 1140, and this is hypothetically speaking, 1140 where we could have potential support, and it's support based off this August point of control and September high volume area. So potential support, and our upper end of the range is probably around 1200 to 1210. So we're basically back in that area, and the October-November breakout has ended up being a fake out, which is fine, and because we called the short up at the point of control prior to this market breaking down. So it's not like we're losing a ton of money. If we were looking for basically a breakdown and then basically a test back of the upper end of the range, we didn't get that. So what does that tell us? That tells us that the market these levels have been rejected by bigger time frame players, and we're back in the range. So it's a tough one if you're long this market riding it down, but if you took our recommendations to short it, you should have had a very profitable week. Okay, I want to cover the VIX only because it's a measurement of fear. A lot of people watch it, and since we had basically our breakout, we've had a lot of congestion, and an overall range 46 to 47 has been the upper end. We've had a really nice support at, let's call it 30, and we've had a few breakdowns below 30, but since then it's held nicely above, and it looks like now we have a triangle pattern, and this could be a resolution either way, but given the fact that the VIX is above this 30 level and continues to make higher highs, we expect, it could easily go back up to 37, 38. Now, I'm not necessarily saying it will, because it can go either way, but this is a level that you want to watch on the VIX, and the reason why is because this triangle pattern, just like on the S&P that we had back in November, it will eventually come to fruition and will give us a direction one way or the other, and the direction it goes is probably going to be the opposite direction of the market. So if the VIX goes up, that means people are paying a lot more for protection, and there should be bigger swings in the market to the downside, and we should see more selling pressure, which may mean revisit of the lows of the year. So it could be troubling, but if this thing starts to roll over to the downside, that's good news. Okay, the next subject I want to cover is bonds, and normally, bonds have been rallying all year, and they've definitely outperformed the market. And as I bring up TLT, which is the ETF for the 20-year Treasury, it's rallied all year, and I think we're close to a crossroads. And what I mean by that is some type of Federal Reserve intervention. I wouldn't be surprised to hear QE3 out in the first quarter of next year, and it's something to be on the lookout for. It's premature right now, but I think that we are close to a point where you could go long, basically long equities and long TBT, which is the ultra short, and short treasuries. And the reason why is basically what I said earlier, is the probability of the Fed having to step in grows because they have to do something. They right now we're in a deflationary environment, and the Fed can't have that. They'll do whatever they can to avoid deflation, and if that means basically another round of quantitative easing, that's what they're going to do. And one thing I was looking at today were the 10-year notes, and the 10-year notes. Let's check them out. Okay, so Treasury notes, that they increase in value as yields go down. So, this is the equivalent. Not the equivalent, but it would be like going long TLT. And what that's telling me is, by looking at the Treasury notes and the volume profile, I see this point of control up at the top of the range. Let me zoom in. Let me try one more time. Okay, so I'm sorry, I got interrupted by a phone call, but the 10-year Treasury note that we're looking at here, this is a 2-year chart, and if I circle back to where the basically Bernanke announced QE2, you can see it was close to a top, not quite, but for the market, for the overall market, it was, let's see, that was the end of August. It was literally right at these lows. And sure enough, it led to a nice rally. And, we're really not, we're about 100 S&P points from those same levels. And if the Fed comes out and announces more quantitative easing, it has me suspicious that you can see this big volume spike, and basically saying that these levels right here will be rejected, and we will see a move back down in treasuries, which means yields rise and the notes fall in price. And as far as targets, I mean, pick your targets on the downside, but you could say these recent swing lows first, and then there's a lot of congestion in here that has a lot of levels. But I just have we've seen this play out, and I wouldn't be surprised to see it happen again. But until then, trading these markets are very opportunistic. Unfortunately, there aren't a lot of opportunities right now. But that's okay. That's just the market we're in. And are we set for some type of snapback rally? Yeah, we are. And whether we get it or not, it's tough to say. You never know. There could be some horrible news that comes out of Europe, and this market just basically implodes and takes another 10% dive. That could happen. But we are at levels where money managers, especially after the holiday week, are maybe looking to put some money to work. They find some bargains in the market. And also, as we look at the euro, we're back at that big swing low that we had bottoming in October. So there should be some opportunities next week. And in the next video, you'll be able to see some of them that I'm looking at as far as an opportunity to the long side. So stay on the lookout, be patient. It's okay to sit on your hands. Look at the dollar. The dollar continues to work to the long side. We're close to that swing high from October. So yes, we are at a potential swing in the market. But until you get that selling in the dollar, buying in equities, buying in the euro, just sit on your hands. If you're short and you didn't take profits Wednesday or today, next week's probably your day to take the risk off there. But I hope this helps. Stay tuned for video 2.